It's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. Hope you had a great weekend. Let's kick off the week now with global commodities markets, starting with the oil markets now. We see oil prices rose today amidst optimism for China's demand recovery. Concerns that underinvestment will crimp future oil supply, and as major producers keep output limits in place. Brent crude that rose by 47 cents to $83.47 a barrel, while U.S. WTI crude for March, which expires tomorrow, was at $76.78 per barrel, up 44 cents. The more active April contract, that was up 0.5% at $76.90 a barrel. The benchmark settled down $2 a barrel on Friday and closed lower by about 4% last week after the United States reported higher crude and gasoline inventories. We'll definitely be watching out how the markets play out this week. Moving on to edible oils now. We see Malaysian palm oil futures, they were set for a third straight session of gains today, tracking strength in rival edible oils on the Dalian Commodity Exchange. The benchmark palm oil contract, FCPOC3, for May delivery, that rose 0.75% to 4,162 ringgit, about $939 per ton in early trade, after gaining 5.11% in the last two sessions. Dalian's most active soy oil contract gained about 0.88%, while its palm oil contract, DCP-V1, rose 1.06%. The Chicago Board of Trade was closed for a public holiday, and palm is affected by price movements in related oils as they compete for a share in the global vegetable oils market. And the Center for Promotion of Private Enterprise is concerned about the conflicting directives emanating from the CBN on where to deposit the old currency notes, whether the commercial banks or central bank. According to the statement signed by the Chief Executive Officer of the Center for the Promotion of Private Enterprise, Dr. Muda Yusuf, the Central Bank of Nigeria needs to give the process of circulating the Redesign Naira a human face, as the agony and trauma inflicted by the entire management of the policy is unspeakable. Dr. Yusuf pleaded with the CBN to allow the old notes to be deposited at the commercial banks to ease current pains and ordeal of returning the old notes. This, according to him, simplified a process to accommodate millions of rural dwellers, the informal sector players, the over 30 million unbanked Nigerians, and several millions that are not literate. We'll definitely be looking out for more statements from the central bank at this point. Back at the former education minister and founder Fix Politics, Obi Ezekwesili, says Nigerian commercial banks are not ready for the Central Bank of Nigeria's new Naira Redesign policy as a takeoff. Speaking on our political program, the 2023 verdict, Ezekwesili explained that the entire policy takeoff was pushed to Nigerians and the adverse effect is devastating. Take a listen.
Even just by virtue of what technology is doing for us as a continent, it does make a lot of sense for us to not be loading bags of money all over the place. But when you think of how the operational plan for this policy has been bungled, it just is appalling. And to think that it also happened so close to your elections, it just is a double whammy, as the Americans would say. You know, so what you need to sort of do is figure out, what are we solving for? If we're purely solving for less cash in our society as the medium of exchange, then what we would do is plan properly for the transitioning. What you can see now is that the banks are not ready. Their technology is not upgraded to the point where they can actually respond effectively. So there's a complete system breakdown. That is the principal thing that you think you're solving for. There are very clear pathways to solving it. But guess what's going on? There's a second thing that we seem to be solving for, which has now taken ascendancy over the monetary policy. We are using the central bank to solve the problem of criminality in our politics. That's an objective.
Is it working?
Is it an objective that the central bank should be smacked into? There's something wrong with that.
Now to our first conversation. It's barely 4 days to the 2023 general elections, and still the focus is on the Central Bank of Nigeria's redesign policy. Diverging views continue to trail this policy as bank transaction channels are overwhelmed as a majorly cash-dependent economy attempts to switch to a cashless economy. There are reports of bank officials being attacked by angry customers, ATMs vandalized. Let's get a sense of the magnitude of the damage to the banking industry. Joining me now is Mr. Oluwole Olusoji, President, Association of Senior Staff of Banks, Insurance and Financial Institutions. Join us right here in the studio. Great to have you on the show.
Thank you very much. Good morning.
Good morning. And obviously, a currency redesign is something we should be, celebrating, at this time. But apparently, it's put a lot of pressure, on our financial system and on bank customers too. And you've been making statements about the damage caused to the banking system at this time. Can you paint a picture of what the cost is right now?
Yes, from our last check, we estimate that the total cost in terms of damage won't be less than 5 billion naira. Yes.
That's quite a sum. And looking at where we are right now, what are the options to actually fund this?
Well, sadly, it's the insurance companies that are going to take the hit on this, because all banks are expected to have some form of insurance. So we can see the impact of those actions on the economy itself, because it's going to trickle down the line from the damage to the insurance companies, to the investors, and all the rest of it, even to workers in the industry too.
Do you think the insurance companies have the capacity to handle this cost that we've estimated at this point?
I believe they do. I believe they do. Our insurance system is sound enough to accommodate it.
All right, you did mention at some point that you wouldn't allow your staffers actually go to work. That was last week. If these attacks, continue, where are you now on that?
Well, since the statement was made on Friday, there had been a lot of direct and indirect engagements from various parties that have shown interest eventually to the comments we have been making, and since we've been sharing affairs of this happening, because we had warned that there was a possibility of this happening. And so all those engagements happened through the weekend. We got quite a number of assurances. Some we're beginning to see visibly. We're beginning to get feelers that a number of the things that we demanded are coming into place, and we expect that all the other things will be put in place. And that was what guided our decision when we held an executive meeting over the weekend to review the position, and on act of faith of what we had been assured of, we asked our members to return.
Can you give us more details of what was agreed upon?
Yeah, the basic thing was about the presence of enough security, and for somebody somewhere to come out and speak against it, because the biggest challenge we had was that since the attack started, we didn't hear any condemnation at government level about the attacks, and it was worrisome to us. I know in the kind of environment that we are in, when there is that kind of silence, it's like a silent endorsement of those attacks, and it spurs them on to go on, because for them, they've been incited, they've done it, nothing has happened, and they're happy to go back to it again. So like I said, during the engagements, we spoke about all those things. And I think it was early on Saturday morning that I read the statement from the first PRO, Adejobi, who came out clearly to the public that anybody found attempting to attack a bank will be treated as an armed robber. So that was a clear statement. Those are the kind of statements that we should have heard a long time ago. I know that Some police commissioners are beginning to talk as well. Yesterday I listened to a statement by the Lagos State Governor as well in that regard, and I expect that the same kind of communication will follow suit across the nation.
And definitely nothing, justifies bank equipment being vandalized at this point. But can you feel the pain of Nigerians at this point?
Yes, I can.
Having money in the bank and not able to have access to that money.
The interesting thing is that, when we talk about Nigerians, bank workers are also Nigerians. So we feel the pain. I feel the pain. I've had cause to look for alternative means of doing my transactions. The little cash I was able to get, I was forced to part with it at a point where I would have transacted my business in an alternative means. So we all feel the pain. And when we're talking of the pain too, our members are also under a lot of pressure. I mean, you see the crowds that are in front of banks, you see the crowds that are in banking halls. Our members since last year have been working 7 days a week to ensure that they're able to serve customers. So, when you are faced with that physical stress, and then you now add the mental trauma based on the threats and the attacks that they've been experiencing, then you can now put everything together and have a clear idea of what our members are also facing presently.
And the former Minister of Education did, say there that the commercial banks are not ready for this redesign policy. What do you think?
I totally agree. When the redesign policy was announced last year, we came out and we mentioned that there could be a crisis simply because stakeholders that would be involved in the entire process of execution were not carried along. So like many have said, it's a good policy. The challenge that has been with that policy is the level of execution. We need to be sincere with ourselves. Execution was poor. And the only reason execution was poor was because there was no engagement to look at all the pros and cons, to look at the possible challenges. I mean, we should look at the whole policy as a project. And when you do a project, there is a plan. You need to envisage all possibilities and have plans in place to be able to address those possibilities. And, in addressing it, it was one of the things that the president mentioned when he addressed the nation, bringing back the old 200 Naira notes. So those are the kind of things that we should have been prepared for. I would have kicked in automatically without having to go into meetings and closed-door discussions.
But we're in it now, we're here now, and the policy, has to go on at this point. What conversations are being had to actually, expand the capacity of banks, at this time? Even though, the banks were not really prepared, because it was quite frustrating yesterday. I was in a supermarket, trying to, make payments for some groceries, but at the end of the day, my app, it couldn't work. I tried to use my card, didn't work. Tried to do everything. I almost wanted to do maybe trade by barter or something, but I didn't have that access. So how can we make these banks, have that capacity at this point? How can we expand that?
Yeah, it's the stakeholder engagement that I spoke about earlier on. It was obvious that with this kind of policy, there would have been a massive migration of people from cash-based transactions to digital-based transactions, right? And so those were the engagements we were talking about, that you need to engage all parties that are involved in digital banking. Because mind you, it is not only banks that are involved. There are a lot of parties all around to look at the statistics of what their system is able to accommodate and quickly look at the kind of expansions that need to take place to be able to accommodate them. Now, one of the ridiculous things, again, that caused this problem is that the kind of transactions that should ordinarily have happened with cash were now being forced to happen. So, and those are the transactions that they are low value transactions, but they are large. So someone goes to the barber and wants to pay 500 Naira. Because he cannot draw 10,000 Naira from his bank, he has to transfer 500 Naira. I've seen people having to transfer 200 Naira. So someone was telling me yesterday that he wanted to buy a donut and he didn't have cash. So you're joking. He said when they told him that they were not sure he was going to succeed, he quickly bit at the donut and started eating it. That, well, I've eaten it, we have to find a way of paying it.
But committed.
He committed. Already. So he was fortunate enough that the transaction went through. So if all these things had happened right from September, when the policy was announced, it would have been much easier for everybody. But what we had was that instructions were just being dished out, and everybody was supposed to jump on the wagon and follow suit.
Do you know anybody using the e-Naira at this time?
No.
Why aren't people using the e-Naira? Because that platform is supposed to be seamless, it's supposed to be on the blockchain and all of that. Why is nobody trying that?
Well, probably the publicity and the campaign on it has not been enough. And this would have been an opportunity to penetrate into the system with it. It would have been the opportunity to go after the people who are still unbanked, because we still have a large number of Nigerians who are unbanked. So that opportunity, that window was there to put all those things to test and to make them work. So people would have seen the kind of alternatives that they had in their possession. And probably if all those things had happened and they had worked, there would have still been a bit of pressure, there may still have been a bit of discomfort, but it wouldn't have been at this magnitude.
All right, do you see this easing, at some point, between now and say after the elections? Are there any hopes that people will be able to, access cash easier, going forward? The transaction channels will actually work, going forward. Is there any hope of that at this point?
Eventually there will be. A lot of it is also dependent on CBN rolling out more money this week. The president has said, go on and send out the old 200 Naira notes. So if they are able to send out enough to meet those demands, it will be better. Now, beyond CBN and the banks, a lot of it also falls on our own part as Nigerians, because a lot of people have gone into panic withdrawals. So you're going to find people who are in possession of cash that they do not need. So it's practically turned into a daily routine that just go and queue and draw. So a lot of people are actually drawing cash that they do not need. So if we sincerely within ourselves know that we do not need that withdrawal, and those who are in that cadre go back home, you're going to find that the number of people standing at banks or at ATMs are going to reduce drastically, right? And with the rollout of the 200 Naira, it will probably ease out. It may not be as fast as we expect, but we hope that between now and the end of the week, we'll begin to see some level of reduction in the pressure. And then gradually we see how it goes on for the next 60 days.
Because we know there is a risk to holding cash that you do not need. There is, and that's why we have the banks. We want to keep our money there. So we're not at risk of losing that money. But let's look at the industry generally now. I'm sure prospective investors will be looking right now into the industry, and they might actually feel discouraged at this point, won't they?
Well, if they continue with the narrative that their problem has been the banks, yes, there could be a challenge in that regard. So it will take a bit to increase their increase their trust in the banking system. But I think a lot of people are beginning to understand that the banks were not their problem, and I think eventually they will turn around, because the truth is that if for any reason, for security reasons, for ease of transacting business and all the rest, we still need to go back to the banking system.
So the banks are not the problem. Who would you say is the problem at this point?
Well, it runs across a lot of quarters, right? But I think the biggest problem was when the CBN came out to say that banks were hoarding money. And our challenge to the CBN at that time was for CBN to tell us how much was actually injected into the system versus what was taken out of the system, and let us see if it was adequate enough to meet the immediate demands of people. Like we said, we do not expect that the CBN would have produced the same value of what was taken in. But what we expect was that the CBN would have been able to provide a fraction that will comfortably meet the needs of people.
All right, talking about the CBN now, what would you like to see, going forward? What kind of, policy shift would you like to see from the CBN at this point to actually, solve this problem and let us go back to the way we were and somehow still push this cashless narrative?
Yeah, I think the CBN should do better in their means of communication. We're all human, we're all individuals, we're bound to make mistakes. And the beauty of it is that if we know that we have made mistakes, what we should be looking at is how to correct those mistakes, right? We spent too much time trading blames. Perhaps if the time of trading blames was spent on looking for solutions, on solving the challenges that were being experienced by everybody, we probably wouldn't be in the situation that we are right now. So communication should be improved upon. Engagement should be increased, because I've known the CBN in the past to engage whenever new policies were brought out. We always received drafts to look at, to come up with our comments, and add a bit of value to it. And in doing all those things, they collate them and then come out with a final draft for us to do. And then there is that constant review that goes on. But in this case, this didn't happen, probably because of the time frame that they put to the entire exercise. But even at that, I think we still had enough time for that engagement from the day the announcement was made. So those are the kind of things that I think CBN should go back to be able to build up more confidence in the cashless and be able to penetrate it, because there is no bigger opportunity that we have than now. This is the time to go into those areas where it does not exist. We have a lot of fintechs that are springing up all over the place, and they're very intelligent. They will be able to look at what exists in those locations, because in reality, we have a lot of locations that have connectivity issues. Some don't even have telecommunications in their region. So if one looks at how to address those areas easily, it will help the penetration, and it also empowers people, because what you would have done in that regard is that you would have brought up a crop of people who will have an additional stream of income, who will have a means of livelihood without leaving their immediate environment, and it will reduce the poverty rate that we have in Nigeria.
Well, it's quite tough in those rural areas. You have just one, bank branch, serving over 50,000 people. That's incredible. I don't know how they manage with that. But we've seen, Q4 earnings and, full year earnings for some of the banks in 2022. What are you seeing for Q1 2023 with all of this?
Well, for Q1, I mean, the first part of Q1 has gone. Now, what has happened in the last couple of weeks is going to have its impact, because when you look at the banks that were affected, I think we should start with that. Imagine that their businesses have had to shut down in those locations that were attacked and their equipment were destroyed. So there's going to be that kind of impact in that regard for them. Now, there was someone who I was in a joint discussion with. For him, in his own opinion, banks had funds with them that they could use as assets, to give out loans and all that. But if you go deeper into the economy, even the people that are doing businesses are now affected, because the buying power of people has been reduced, right? Because they do not have the cash to purchase. And if their purchasing power has been taken away, it now affects the manufacturing sector, because they have to reduce the volume of what they are manufacturing. If you go, let's look at agric, for example. I read yesterday that some people had to start selling their wares at ridiculous prices just to cut their losses. So at the end of the day, everything comes back. You know, it's like a vicious circle within the economy itself. So yeah, there will be an impact on Q1. What we don't know presently is the magnitude.
And obviously, yes, we do have that domino effect, you know, in for most of the sectors. I want to thank you so much, Mr. Oluwole Olusoji, President, Association of Senior Staff of Banks, Insurance and Financial Institutions, and I hope we can solve this issue as soon as possible, because I miss, you know, having to, you know, do transactions easily without being afraid that it's not going to go through and all of that.
Yeah, it's our desire that things will change, and we believe it will.
Thank you so much.
Right. Thank you very much
for coming on.
Thank you.
All right, we'll take a break now as the cash crunch continues to bite. Let's take a look at what to expect for the economy in the first and second quarter. That's our next conversation. Just stay with us. Welcome back. Now to our next conversation. Well, Nigeria's GDP growth for the first quarter of every year is typically dampened by reduced economic activities after huge festive spending in the last quarter of the previous year. But this year, we have to deal with the scarcity of the Naira notes, which is already crimping major productive sectors of the economy and could make economic growth much slower. Let's talk to Professor Fred Olayele now, a professor of economics, Sprott School of Business, County University, Canada. Great to have you. Good morning.
Good morning. Good to be here.
So what do you see for the Nigerian economy in the first and second quarter? I remember in 2022, we're already hearing the drums of a global recession for most economies. What are you expecting for 2023?
Well, for a start, maybe we should look at what causes a recession in the first instance. So when demand outstrips supply, an overheated economy can lead to a recession. Imbalances from structural and cyclical forces, you know, leading to the transmission of financial shocks to the real sector. Another scenario is when an exogenous shock outside of the economic system itself, you know, triggers a supply shock or a demand shock. In the case of Nigeria, aside from the ongoing pressures from the currency redesign policy, you know, by the monetary authorities, which your last speaker alluded to, and the overall financial imbalances in the public sector, I think the likelihood for a recession should be analyzed in the context of aggregate demand and supply, as well as happenings in the global economic environment. So you'd consider the negative output gap, because the Nigerian economy is obviously operating below full capacity. And for context, real GDP growth has been below its potential in the last decade, with an average of about 2% growth, right? Depending on which source we are looking at. And also 2 recessions occurred in the last 10 years. You might also want to consider global imbalances, you know, from structural and cyclical factors. For example, the ongoing Russia-Ukraine crisis and the supply chain disruptions and its impact on energy prices and all. So to situate this within the Nigerian context, if the ongoing scarcity of the Naira generates pressures that reach a threshold large enough to cause overheating, then you can expect that to generate financial imbalances large enough to cause economic distress. And who knows the extent of the economic damage that the ongoing currency redesign policy has caused already. I guess we have to wait for the Bureau of Statistics to release their figures in the coming months.
Yeah, well, definitely.
And of course,
Yeah, we'll definitely be waiting for all of that report. But, you know, in 2022, the drums of recession were already there, you know, with global central bankers, you know, hiking rates, you know, trying to fight inflation and bring it down to their target. But how does this Naira redesign policy, the cash withdrawal limit, how does it play into the inflation battle by the Central Bank of Nigeria here?
Well, I mean, given current macroeconomic conditions, most central banks around the world are, I mean, very aggressive in the current environment, deploying monetary policy tightening to fight high inflation. Financial conditions have tightened everywhere, and I think serious central banks need to do what is required to rein in inflation by raising the policy rate. And Nigeria is not an exception. The only thing one would say is the impact on private sector lending, you know, should be monitored. But for me, as long as the Monetary Policy Committee does not compromise on its primary mandate, that's not really an issue. You know, the global economic condition is, it warrants that. There's too much volatility, and central banks have to do what they are supposed to do. But perhaps we should talk about the cash crunch. You know, I think that's the elephant in the room. The Naira redesign issue presents a major conundrum. You know, both a policy conundrum and a moral conundrum, for that matter.
And do you think it's going to take inflation even higher?
There are many factors. There are many factors that would determine what happens, you know, in the coming months. But for all you care, you know, investor confidence, lack of uncertainty, and expectations, you know, those are immediate dynamics, you know, that will determine what happens in the short to medium term. And if you let me speak a little bit to the cash crunch, I do think that the notion by the monetary authorities, you know, that the policy is about tackling inflation, terrorism financing, kidnapping, and illicit financial flows. It does appear that there's a sort of a mixed bag scenario where you don't really know if they are trying to use monetary policy to address inflation, or if it's about other political economic ramifications, you know, vote buying and what have you. You know, as I look at the situation, it's pretty hard to create a dichotomy and know what the policy objective really is. I mean, on paper, it's a no-brainer. It's legitimate to want to fight money laundering or kidnapping for ransom and all of that. On paper, it's okay. I mean, India did the same thing in 2016. Kenya, as recently as 2019, you know, pursued a similar policy. And as we speak, Cameroon and Gabon are, you know, towing a similar path. In fact, just last month, Somalia announced a similar policy, and their central bank has set a deadline for mid-2024. That's at least 18 months in advance. But in a largely cash-based economy like Nigeria, you know, where close to 40% of the population do not have bank accounts, I think the unintended consequences should have been considered. If policy implementation is going to happen within a complex system like Nigeria, then you have to prepare for gaps and other constraints, you know, in the context of information dissemination, incentives, digital infrastructure, and all of that. And there's really nothing too complicated about that. Even in traditional policy-making settings, implementation should be based on control and prediction, you know, in a continuous manner.
All right, Prof. Prof, which sectors of the economy do you think will be the hardest hit, you know, with this cash crunch? And also paint a picture on the impact on jobs.
Yeah, so that's that's another important one. I do think that for starters, we are talking about financial shocks now, which is going to be transmitted from the financial sector to the real sector of the economy. And if we are talking about the impact on jobs and unemployment, then we have to take a step back and look at the political ramifications, the political economic ramifications for the entire country. Nigeria is a largely informal sector-based economy with over 60% of GDP, operating largely in the informal sector. And when you even talk about employment and unemployment figures, then that paints a pretty scary situation. And the point I'm trying to make here is that for an economy where more than half of Nigerians are unemployed or underemployed, I was looking at a recent analysis by the Bureau of Statistics. Over 133 million people live in poverty. I mean, that's over 60% of the population. And when you even disaggregate that by states, you find that some states are as high as 90%. So you may want to think about what that means for the capacity to engage the millions of young people that will enter the labor market. In terms of specific sectors, look at folks in the informal sector, those who, again, make their livelihood from trading, retail, and what have you. That's going to significantly impact their abilities. And then people in the rural areas as well, who, again, depend largely on cash-based mechanisms and channels, is going to have a major impact. People in urban slums. So you're talking about 2/3 of people in the bottom of the economic pyramid. I guess, again, we see what the numbers say when the Bureau releases that in a couple months.
We'll be looking out for those numbers definitely. But going forward now, what kind of economic policy reforms would you like to see for Nigeria to drive fiscal sustainability and revenue generation?
Yeah, thank you. That's another important element. And let's face it. I think Nigeria needs a new economic paradigm, a complete overhaul at that. And I mean that literally. A new economic architecture, with structural innovations and regulatory modernization based on the power of the market to create social progress. For too long, the political class has delayed essential reforms that could really put the country on a sustainable economic and social development path. Government must diversify its sources of funding, reduce its borrowing cost, and implement critical policy reforms, that can enhance both domestic and external resource mobilization. There's nothing wrong with borrowing. It's part of fiscal management and economic development programming. But you cannot depend on indiscriminate borrowing, to perpetually fund deficit spending. A deficit reduction plan that is integrated into the broader economic policy, I think, is very critical, so that investors and taxpayers can have confidence in your fiscal credentials. And that's not rocket science, really. It may appear that options are limited in the current global environment, given what we are seeing in geopolitics and macroeconomics. But countries everywhere are devising ways to innovate. It's really about taking stock and looking for new growth drivers in the economy. Your previous speaker talked about the digital economy. So what is Nigeria doing about emerging and disruptive technologies? You see what is happening in the venture capital space, with startups, attracting unprecedented levels of international private financing from Silicon Valley and other parts of the world. So for the umpteenth time, there are opportunities for incremental innovations that can help the country to improve allocative efficiency across the entire resource mobilization value chains. However, the economic managers of Nigeria must come to terms with the reality that Nigeria cannot leapfrog itself, from the fundamental features of its socio-economic systems. And what are those? What are those features that economic managers in the country seem not to want to face? I will list them quickly. So you talk about low tax base, a large informal sector, inefficient tax collection systems, institutional constraints, a debased value system, distrust in public institutions, and other structural impediments. Simply put, people want a new social contract.
All right.
And I think there's no better time than now to sit down and reimagine what that configuration would look like. Until that is done, again, it will be hard to build on a faulty foundation,
All right.
which can only create further woes.
All right, Prof. I guess we'll have to leave it there. Thank you so much, Professor Fred Olayele, Professor of Economics, Sprott School of Business, Carleton University, Canada. It was great having your perspective today. Thank you so much.
Thanks for having me.
Thank you. Yeah, so now let's move on to the markets. It's still about the cash crunch right now, and we have Ini this time. Ini is giving us the details this time. Ini, I don't know about you, but the last time I handled cash, it's been about 3 weeks now. But I'm sure you have cash.
Oh, really? Where did I get it from? Even the president of the Association of Senior Staff of Bankers said he didn't have, then I don't know
then
where.
Who are we?
Exactly. I don't have a printing and minting securities in my house or in my neighborhood, so we're all in this together. But, Ladi, I was listening to the radio on my way to the office this morning, and it was a call-in program. And I hear a lot of Nigerians changing perspective, about all of this. I hear more people now saying, oh, it's we're just suffering this for a bit. Even though we did hear the former Minister of Education there say that it's not the job of the CBN to fight vote buying and corrupt practices and all of that. But it seems some Nigerians are beginning to buy into it. So let's just suffer this for a bit. It might have a bigger good, at the end of it. But I mean,
and it'd be great to also, get to Kenya's level, with such a cashless economy.
But Kenya didn't have to do it this harsh,
But maybe we'll just go through that pain, and somehow in the future we'll be running cashless.
Because we can't continue like this for a long time, and as Mr. Olusoji said, there's also the issue of getting the banks to build up their infrastructure and personnel.
Very important.
And personnel, because I think if we had that option, you asked him about the Naira.
Right.
Which should be an option at this time.
Yeah, because the Naira is right there in your banking apps. Why not just, send through it? But sometimes you can't even open a banking app.
Exactly.
So how do you access the Naira?
Exactly. And you do not try new things in the time of war.
Yeah.
It's tested and trusted before you need it. And then you can now depend on it.
Exactly.
At times like this. But I mean, election, I think we should all remember that there's election this weekend. It's very important, because if anything scuttles that election, then we will be in this trouble for a longer period of time. So it's very important that Nigerians do remember that.
So let's just endure.
Yes, endure.
Endure. Fantastic.
All right, let's do the markets now. Don't get carried away by Ladi and all of that. We'll start with the FX turnover for the week ended the 17th of February. And what we see that there was a total of $616.57 million. When we saw that there was a decrease, first of all, in the FX of last week. The FX spots was positive, almost 50%. Forwards also positive, almost 100%. doesn't mean people are turning to the dollar now. The futures was less, just about 5%, and the total positive we had for last week was 36.5. People could see the next one. Total value of transactions was almost 50% higher than the previous week at $503.38 million. That's for the I&E window. And then, of course, if we could see the next one, and then there you have the rates. It was at 461.31 for $1, and it was unchanged at 400. But I do know in other markets that the Naira gained value, well, maybe as little as 0.1%. But let's have Tobechukwu Ikpe join us now, fixed income dealer with Access Bank. They are more into that system, so you should be able to give us more information. Hi, Tobechukwu. Good morning. How much do you have in cash at this time, Tobechukwu?
I have very little money to hold of it, so I really need to spend it.
All right, so what's happening to the value of Naira? We see here that at the NAFEX rate, it was unchanged for last week. But I think it was the I&E. Obviously, the parallel things are happening there. What's happening to the value in the midst of all this scarcity of Naira?
So we've seen the Naira remain resilient in the official markets. As you said, they remain unchanged week on week. That's due to the central bank's interventions for the FX market. Last week, Friday, they conducted their retail SMIs FX auction that occurs every 2 weeks. So in that space, corporates can bid to fulfill their request for FX to import stuff like raw materials, petroleum products, and agricultural products also. So the CBN has been quite consistent with this, which has kept rates stable at these 460 levels.
All right, and last week we also had that news from Moody's where they said that the central bank may delay in paying some of those FX they're supposed to pay to some of those banking. Tell us what does that really mean, and what's the implication? Should we be worried? Is this a default from Nigeria?
It's not a default from Nigeria. The central bank, as you know, is also a bank, so they enter transactions with commercial banks in Nigeria. Also, that Moody's report talked about 4 transactions that commercial banks currently have with the Central Bank of Nigeria. And you know the global conditions with the Russia-Ukraine war really affected a lot of things, and impending recession. So Moody's is just doing according to them, their own outlook of what could happen. But we've seen in that same report, it stated that it's unlikely to happen, and the central bank has never defaulted in its payments and obligations to the commercial banks. So that report is just the Moody's giving their own risk assessment as you may have it. But for the banks, what we're saying is that anytime the banks need their dollars, anytime the maturities come, they negotiate with the central bank, and the central bank pays them as a wager. There's no default on the part of the central bank.
So there's no cause for worry, and it does not affect our ratings in any way?
Moody's is a rating agency. They can, according to their own discretion, decide to give you whatever rating according to their own discretion. But for the reality on ground in Nigeria, maybe because of uncertainty in changing administration, maybe that is why they are having negative outlook. But for the reality on ground in the financial markets in Nigeria, there's full confidence in the central bank that they will meet their FX obligations as before due.
All right, Tobechukwu Ikpe, a fixed income dealer with Access Bank. Thank you so much. It's good to know that we don't have a default coming from that area.
Thank you for having me.
All right, Ladi. So yeah, I mean, we might be struggling with FX shortages, but it's good to know that most likely we will not have a default. The central bank will not default in meeting up with its financial responsibilities.
Exactly.
Because that will affect our ratings, and that obviously increases the cost of borrowing.
Of getting all those funds in.
Exactly.
Thank you so much, and it was great having you on this side. Yeah. Thank you. All right, now let's look at other markets. Now we see Bitcoin try to gain pace above the 25,000 resistance zone, but got hammered back down with sell pressure. Look at the market sentiment today, 58 points back to neutral after playing around greed for about 3 trading days. Now let's look at the market cap, $1.12 trillion, down 0.33%. So it's still above the $1 trillion level, but we see there's some pull out and pull back there, but we're still above it. It did try to go below it at some point, but we still managed to stay above. Volume traded 47.27% up, and Bitcoin dominance sitting at 42.23%. Let's look at the price of Bitcoin this morning, $24,504, down 0.58%. We've seen a pullback with some profit taking in the market, and same with some altcoins there. Volume traded $28.60 billion for Bitcoin. Let's bring in Olumide Additional now, financial market analyst. Hello, Olumide. Good morning.
Yeah, good morning, Ladi. Thanks for having me.
Yeah, so Olumide, it's still about the cash crunch here in Nigeria. I know you're not, suffering that right now because you're not here in Nigeria right now. But how are stable coins and crypto playing into all of this drama?
Yeah, thanks. You should understand that the importance stablecoin play in the crypto market cannot be underestimated because many investors use these assets to hold their positions, particularly providing liquidity in the crypto market. I haven't said that, Bitcoin this year impressively is up more than 45% year to date, and that's triggered by the increasing positions by investors. But what we are seeing right now is that regulators, particularly in the United States, are going after stable coins. They are seeing that it poses systemic danger in the financial market, and they want it kind of under their jurisdictions. But there are a lot of naysayers saying that stablecoins are not securities, so they shouldn't have that kind of oversight. And we particularly saw what happened to BUSD, one of the stablecoin that has exposure to the Binance exchange, and you saw movement towards the USD. Interestingly, back home in Nigeria, because of the Naira scarcity, we are seeing high inflow of interest on the USDT, and data by Google Trends shows that Nigeria has the third highest interest, just behind Laos and China. But if you look at it, Ladi, the way the market is swinging, it means that $25,000 for Bitcoin is now the key resistance level. Any break above that, with inflation data coming negative, but that will be left to be seen because the US dollar right now is rallying against its peers. So there are a lot of headwinds, and there are a lot of things you need to look at the market. But interesting to say, the crypto market still remains resilient, with the bulls having the day this year.
Yeah, a combination of headwinds and tailwinds in this market. Thank you so much, Olumide Additional, financial market analyst. Thank you.
Thank you.
All right, let's look at the top alts by market cap. Let's see the sentiment there. It's squarely mixed there, with BNB still staying above the $300 mark, was up 0.08%. But we see Matic there having a big pullback. It's had an incredible run this year. It's $1.49, was down 1.94%. And we see XRP still holding that 40 cents level, 39 cents today, 0.45% down. So that's how the crypto market is looking today, and we'll be definitely looking out to how the markets play out with all of that data coming out from the US this week. All right, so that's the show today. Thank you so much for watching. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and check out videos, and you can watch all our productions. Thank you for watching in. I'm Ladi Williams. Enjoy the week.